question.
Uh,
All right, what's up? What's going on, dude? What can I do for you?
um, so I've been going back and forth with this realtor for like I say about a month now. Like just and it's off market. She sent me like 5 properties and I just need help like because I really don't understand how to do cash like because I was doing cash before and like I don't know. I struggle with offering cash. And when I did the first time, he said no, I want to do seller finance. I was like, okay, we can do seller finance. So I wrote up an offer for seller finance. Now he's like, no, I want to do cash, and I'm coming down with 70,000 on what he's coming down 70,000 on each house. So like my question is, how do I know if it's good or not? I done asked AI. AI is giving me answers but at the same time, AI could be wrong. So that's why I'm coming to you.
So, but I'm confused at your question. You say what looks good. What looks good when they're asking for cash, or what looks good when they're asking for seller finance?
When asking for cash, because in the email she sent me, are you recording? Because I can show you the whole email. She says the dude came down 70,000 off current retail value for each 5 turnkey properties. So I don't know, is that like should I take that
Well, hold on, hold
or
on, hold on. Are they talking about a cat? We're talking about a cash deal.
yeah.
Okay, all right. Let's start there. All right, what is the purchase price? How much are they asking?
No, no, that's the thing. I don't know. I
They
guess
don't know how much they want.
well for in total for all houses they want 1.6 for all 5 houses.
Oh, it's a portfolio.
Yeah,
Oh, okay, that's different. All right, no, it's all good. Okay, so it's a portfolio. They want cash. Do you have what are all the properties rented out right now?
yeah,
Okay. Do you have how much each property is renting out for right now?
yeah.
Okay, and then do you have how much each property will rent out for, like the market rent?
No.
Okay, so what we'll do is we're going to underwrite it based off of what you've got, but then you're going to have to because yeah, this is going to get posted, so I don't want you to give the address. All I want you to do, and I'll show you how to do it, but all I want you to do is find out what the market rent is for each one.
But do I just use like Renometer?
Yeah, you can use if you know how to use Redimir. That's literally what I was going to suggest. So yeah, so what you're going to have to do is put each property into Renometer and see what it rents for. Write it down. And then once you have that information, then we can finish underwriting the deal. But we can start it right now. As long as you've got what each one is currently being rented out for, you're good. Let me ask you this. Do you have the expenses for each property?
Yeah, she said she gave me like a estimate of how much each property should cost. Like she gave me a detailed email.
Okay, perfect. So let's do this. They're asking how much? 1.6?
1.67.
1.67 million is what they're asking. How many properties is it total?
It's 5.
5 properties. Okay. And do they want the same amount for each one,
No,
or
not
did they give you a price breakdown for each one?
they didn't give me a price breakdown, but like she gave me like comps for like what it's selling for.
Okay, so
These
are these on market?
no, the off market.
Okay, so what they would sell for.
Okay. Yeah, so the
Okay.
comp is
No, I
most
don't need the comp. I'm just running numbers right now. So divided by so what I'm doing is I'm taking 1,670,000 and I'm dividing it by 5. So we're looking at an average of about $334,000 per property. Okay, you follow me?
mhm.
So each property is worth $334,000. How much did she say each property was worth? Tell me that. What are the comps that she gave you for each one? Don't give me the address. I just need the prices that she gave you.
So one of them is 460.
Okay.
One of them is 400. The other one
Okay.
365, 385, and 400.
Okay.
So
So
currently he rented. I'm going back to your rent question. He's renting it out for 1,900 on one of the houses, and now the projected rent is 2,200.
Okay. Why are you?
Yeah, and
Oh, hold
yeah,
on a
that's
second.
for the
Hold up. I keep forgetting I'm on the tiny box. Okay, so do you have the properties already broken down for which one is renting for what?
uh. Well, I had like for because when I pitched seller finance,
All right,
I had
give me the rents that they're getting right now, real quick. Just what they're currently renting for. You said 1,900. What's
and
next?
then 1,800,
Okay,
1,500,
okay,
1,600, and 1,700.
okay, and then let's see. I'm just taking some notes. All right, and then you said the one that is 1,900 will rent for 2,200. What's the
Mhm.
next one?
2,100.
Okay,
And that's the same dude I was asking about. He wants to keep the tenants in there, but might getting low. Uh,
are you still looking them up?
yeah.
Okay, okay. Then I'm gonna keep doing what I was doing. All right, so all in all,
The next one's
according
1,800.
okay, according to the realtor, he's got about $2 million worth of properties, and he's trying to sell them for 1.67. Now, is this 1.67 before the $70,000 he took off of each one, or is this after?
This is after he said the seller can come down to 1.6 for all houses.
Okay. All right, so let me see. I'm gonna do some math on my phone real quick. Currently, they are renting out monthly for $8,500. All right, so let's look at this. All right, so 8,500. So I'm gonna figure out the cap rate real quick. So 1 point, nope, 167,000. All right, what is the? Do you have the expenses?
For each
How much?
house, like repair value.
No, not the rehab. I need to know. So do all the tenants pay their own utilities, or does the landlord pay the utilities? Does the landlord pay for anything other than the taxes and insurance for the house? That's what I need to know.
Uh, I assume not. I
No,
think tenants
we
who pays
can't we can't assume. I need to know because that's going to drastically change. Even if he's paying for something as simple as the grass being cut on every house, that can drastically change the numbers because we're going to multiply it by 12 for 12 months in a year. So we got to know that.
I'm a text her right now. Do you no,
Yeah, just ask the realtor if there's any expenses on the property.
oh, like a
Monthly.
mortgage?
No, 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 no. Well, yeah, I mean, we should know if there's a mortgage. Well, if we're doing cash, it doesn't matter if there's a mortgage. No, expenses like, does the landlord pay for utilities? Does the landlord pay for uh, gardening or landscaping or anything like that? That's kind of stuff we need to know. Or is he only paying for the taxes and insurance?
The next one rents out for 1,900.
Okay.
They don't like on average they just pay taxes and insurance.
No, there's quite a few times, most of the time actually, because the problem when you have a tenant and you let them pay the utilities, the house is still in your name. So if they don't pay the utilities in a lot of states, then the utility company comes after the landlord. So in order to not have that happen, the landlord will just pay the utilities and then charge the tenant for them
Okay.
or build it into the rent.
Can you do that next rental meter for me? Cause you know how like if you're on the free trial after like a certain amount, you can't.
Yeah, just DM me the address.
I see.
Okay.
Actually, for the one before that, you can really put 2,000 because it was $1,998. So that's 2,000 in my book.
Fair enough. Okay. So it is currently renting out for 8,500, right? Yep. And it can rent out for 10,050.
Oh, okay, never mind.
What?
She says, how much are the monthly payments including taxes and insurance? Or was that what he was asking for? 1260, 837? Is that
No,
what you guys?
no. I need to know. I mean, I do need to know the monthly tax and insurance, but I need to know. Did she just respond with that? With the here's the taxes and
No,
insurance?
I'll just scroll down on the email.
Oh, I do need the. What does she give you? Monthly or yearly taxes and insurance?
That's monthly.
Okay, what is the taxes monthly?
Uh, so in total it's 1260.
1260.
Yeah, 837. This for each property.
Wait, hold on. This is for each property?
Yeah. You
Okay,
want
hold on. Because
it?
I was doing it a little bit different. Okay. So let's do it here. Okay. Go ahead, give me the tax. You said 1260.
1260, 837, 1106, 503, it's 659.
You said 669.
659.
Okay. $4,365. So that's $52,380 a year. Okay.
Does the tenant pay just insurance and taxes?
Is that just the taxes or is that the taxes and the insurance for each one?
No, I was just repeating my message that I sent.
No, I'm asking you. This
Say it again.
this 1260, is that the taxes or the taxes and the insurance
Yeah,
for that
that's
property?
taxes and insurance.
Okay. All right. So I need to know if he's paying anything else, but I'm gonna run the numbers just assuming he's not until you get an answer, okay?
Okay. And
All
you
right.
said that changes the number for the bond? Why so?
Because the more expenses that it's coming out of this $10,050, the lower it's gonna make the cap rate.
Okay. But when it comes to like, I never heard somebody worry about the rent when it comes to cash deals. So why does it? Oh, because your investors usually buy and hold.
Yeah,
So
well, no,
okay,
not only that, but this is a portfolio deal. So these are probably the prices that he's asking. You can't sell them to a flipper because he's asking too close for what they're worth. So we're not going to be able to sell this to a fix and flipper. So we can only sell it to a buy and hold, someone who's going to either keep the tenants that are in there, or go up on the rent and put new tenants in there, or whatever they're going to do. So
and
yeah, this is absolutely going to go to buy and hold, and then we're going to try and see if we can move it all in one shot since it's only 5 properties. And if that's the case, then we need to figure out the cap rate.
oh, okay. And that that led me to my other question when it said the average it's like a 70K cutoff from the retail. So I was thinking, is that gonna leave any profit margins for the flip? But I don't think so. If let's say for one of the properties, they got 20K in the pairs, so and then 7K off. So, I don't. Is that gonna?
You cut out. You gotta say that again. I didn't hear anything you said just now.
I damn. But I said She said there was like 70,000 off on each property. So, and one of the property need like 20,000 in repairs. They say I wanted a 5K or 10K wholesale fee. Is that still leaving profit margins for to know that at the end of the day they're just buying it as retail, right?
Yeah, they're buying it. They're buying it, holding it. So
Yeah.
that's it's not about meat on the bone. It's about, is the cap rate or the cash flow going to be enough to justify them paying a higher price in cash?
Yeah.
No chance this guy will take creative, huh?
Uh, Not no chances because he's the one who said, "Let me see. I want to sell the finance." And then after negotiating, because he wanted like 7% interest, and I was like, "I'm not doing that. I would do 5." He was like, "He's not doing that," and that was before I was really building interest on top of the purchase price. So I gave him a new offer. It was like 40,000 over because most of his house up on for like 400,000, like
Mm-hmm.
450. It was 40,000 over, and I thought that was gonna be perfect for him. But then she hit me back with an email saying, uh, he's extremely busy and he wants to see what you can do for a cash offer. He's no longer right now interested in seller finance. Ah, shit.
Yeah, this guy. Both of these people don't seem like they're very synced up.
Yeah.
Okay, so I got the numbers, and hold on a second. Let me double check this.
He said,
I'm double checking something really quick.
like, yeah. You just started talking. Works, you know.
Okay, so I got my numbers, and then I'm going to show you how to do it. And for anyone that's watching this video, obviously there was stuff, math that I was doing in the background you're not going to see. There's going to be a complete and total breakdown of this for you too, DJ, on
Okay.
how I got to this number. So essentially what I'm doing is I'm figuring out the cap rate for this portfolio. And if we're going to wholesale a cap rate, a lot of people have different numbers, but for portfolio deals that are long-term rentals, we like to be at about a 12 to 14% cap rate at a minimum. For short-term rental, a little bit higher, like 12 to 15% cap rate if we're going to wholesale it. This deal has a 3% cap rate.
Oh, shit, that's bad.
That's not good. Now we have to look at each property individually because I just looked at it and underwrote it as a portfolio, meaning we would sell all 5 properties to one person. And that's probably not going to fly. But selling them individually, we have to look at those numbers and see. And we basically just have to check ARV versus, what someone's going to have to pay, because obviously they're going to have to get a loan, up to 300,000, 400,000 or whatever this guy's asking for. So they're going to have to go to a bank. So we're going to have to, factor all that in. I'll show you in a different video how to do that. But so here's what you do. So you take the rent that it's now. I took the rent that it's currently getting. I didn't take the new rent. I don't know if it's going to make that much of a difference, but you and I are going to run it together at the end to make sure that you understand. So that's why I didn't run it. So this is based off of this, what it's currently renting for. So you take what it's currently renting for, $8,500, and you multiply that by 12 because this is monthly. So we need the yearly number. The yearly number is $102,000. You take $102,000 and you subtract the expenses. This is why I told you why this could make a difference, the expenses. So right now we're operating under the assumption that his expenses is only his taxes and insurance every month. So that yearly is $52,380. You subtract those two and you get like 47,000 some change. Hold on, let me look at it. $49,620 is what you get. Then you take that number and you divide it by the purchase price. So you take $49,620 and you divide it by $1,670,000. And then it'll give you a decimal. And then you just take that decimal and you can just look at it and see what it is. But if you want to do the math part, you take the number that it gives you and you multiply it by 100, and that'll give you a decimal point number. That's the cap rate. So in this case, it was 2.97. So now bust out your calculator on your phone, and we're going to run it with the new rent, and we'll see if it works better. So let me know when you're ready.
I'm ready. I'm just putting all the what it could rent out for in my calculator.
All right. So we got $10,050, right?
Mm-hmm.
And we're going to take that. We're going to multiply it by 12 because we need the yearly amount.
Okay.
What did you get?
1,600.
There you go. Now we're going to subtract the yearly expenses, which is $52,380. What did you get?
68,220.
Perfect. Now hit the divide, and we're going to divide that by 1670000. What'd you get?
167,000.
Yeah, no, 101.6. So another zero. 1.67 million.
So 68,220, then divided by 1.6. Oh, so okay.
What'd you get?
Got 0.04.
Perfect. Now multiply that by 100. So times 100. What'd you get?
4.
You got 4.085 up in a bunch of shit.
Yeah.
So it's a 4% cap rate.
And it's supposed to be at 12.
It should be for us to move the deal. It's a minimum of 12.
Anyway.
Yeah, and the reason why he's just asking too close to market value for his property.
So is that if like let's say
Wait a minute. Hold on a second. Hold on 1 second. Is this how much he's selling each property? No, it's not. That's
no,
not how much.
that just
It's the 1.67. It doesn't matter. Yeah, we did the 1.67, so we're good. Yeah, we're still good. Go ahead. What were you saying?
So let's say they only pay the taxes and the insurance. So would that number make a big difference? Like, can I see the difference from 4 to what do you think it's gonna go up to if they don't have to pay that 52,000 or doesn't?
He's absolutely paying that. Every homeowner has to pay their taxes and insurance.
No, I'm talking about for the tenants.
What do you mean what do you mean?
Because
tenants are paying his taxes and insurance? They're not. The tenants don't pay the homeowner's taxes and insurance. I mean, like apartment complexes, and when everything's all figured out, then yeah, technically they're paying it. But no, he's collecting $2,200 a month from this property, and he's paying out $1,260 a month in taxes and insurance, and then he's keeping the difference.
So what was you asking me about? Does the tenant pay just insurance and taxes?
I was asking if the landlord only pays insurance and taxes, because a lot of times the landlord will also pay for landscaping, for utilities. And if that's the case, then we need to add that to this number. But the landlord is 100% paying his taxes and insurance. I mean, she even said it. She said, there's his taxes and insurance right there. That's what he's paying each month.
So what was the question I was supposed to ask? Because I put, is there any expenses on the properties? Does the tenant pay just insurance or taxes?
So right now, as it sits, this is the best case scenario. The best case scenario is that the landlord is only paying the taxes and insurance. If the landlord is also paying for something else, like landscaping, electric, water, gas, whatever, then that's going to make this number bigger, and it's going to make your cap rate smaller. Because the more that we're deducting from how much the property will make each year with expenses, the lower the cap rate is. Well, that's not true. Also, it takes into a factor how much he's selling it for. If he was selling it for like $1 million, then yeah, this deal would probably work. As a matter of fact, you want to do it?
Yeah,
what it would look like at $1 million?
Yeah, but before we do that, So I should not put that the tenant pay just insurance and taxes. I should put the landlord.
Yes.
All right, I'm gonna correct that.
And then I'm going to run this really quick while you're texting that. So it was like $120,000 a year. I'll use the max rent. So it was like $120,000 a year minus $52,380. That equals $67,620. And then divide that by $1 million equals, and then times 100. Oh, it's still only a 6% cap rate. Yeah, he's just asking too much for his properties versus what they'll bring in.
Okay. So what about so if it's a 4% cap rate for like all of them, what about for individual? Can I or is that not gonna work out still?
I'm thinking individual because the cap rate is so low on the portfolio. I mean, individually, it's probably not going to be much better. I mean, let's put it in as if this were a deal.
Wait, aren't we
So,
supposed to do 70,000 off of that comping price? Because that's the original email she sent me. And she said he's down to do take off 70,000 for each house.
well, here, I'll put it this way. Remember when we did the math earlier where I said if we took this number and divided it by 5 for 5 properties, it'd come out to $334,000?
Uh-huh.
So let's just put $334,000. Now, I'm running this under the seller finance calculator, but this is going to be a bank deal because the seller, or I'm sorry, the buyer is absolutely going to have to get a mortgage.
Mhm.
He's not going to be able to pull, I mean, most of the time, most of them can't pull this out cash. So if we do a 300, what did I do? 334 purchase price, and they're going to have to put a minimum of 20% down. So that's $66,000, $66,800. That'll be the seller finance amount will be $267,200. They're going to get charged an interest rate. So typical investment right now is probably 7.25 on a good day. And then it'll rent out for 2,200. So 1822 will be their principal and interest payment plus 1260. So 1822. This was 1260 for both. So I'm just going to take this out. Okay. So here's the deal. Oh, yeah, here's the deal. So here's their monthly payment because of their mortgage, because they're going to have an interest rate if they're going to get this through a bank. And no one's, I mean, they're probably not going to pay $335,000, pull it out of their bank account. So they're going to go to a bank. They're going to get at least a 7% interest rate because it's an investment property. That's going to give them a monthly payment of $1,822 plus the taxes and insurance every month. That means every year they'll be losing $684 on this property, and the entry fee percentage is 24%. So just so we're on the same page, this price is lower than any of the prices that she would give, with the exception of maybe this one and this one. So, like I thought, I don't think this deal will work. He's got to come down on his price, or he's got to be creative. And I don't think he's going to come down on his price enough to where you could make this a portfolio deal. I think your best bet is going back, pivoting the other way that you did. Say, hey, look, I ran the numbers cash. It's not going to work for my investors. We're really looking at doing something creative on this one. So can we take a look at that option again? If she says no, move on.
Okay.
If she says yes, bring it back here and I'll help you underwrite it again.
Actually, to be honest, because I was going off of the rent, like what she gave me, but it totally slipped my mind that, the tenant's been in there since like for 10 years. So wait, damn, can you get those numbers back? Yeah. So I was going off of like the 1900, 1800. Whole time I could have been going off of the 2200. So that's going to raise his monthly payment by a lot.
Well, that's the other thing too. So I would go off of these numbers when dealing with the seller, and I would go off of these numbers when dealing with the buyer, because that's called a value add. So when a buyer is looking to pick up a property, especially one that's got a tenant in it, a very common value add, and by value add, all that means is added value to buying this on top of the cash flow, on top of the low entry fee, on top of the 0% interest, on top of all that, you can also raise the rent. That's a value add. So when you're dealing with the seller, you don't want to give away your value add. I mean, you can, but I wouldn't. I would operate under the idea that this is what we're bringing in. And then when you're talking to the buyer for the deal, then you talk about what they can raise the rents to more entice them into wanting to take your deal.
Okay.
Does that make sense?
Mm-hmm. What is your name?
So, I mean, if it were me on a creative deal, how much did you offer him down the first time?
I think like 30,000 down.
Okay, let's do. I don't know. I can do 160,000 down. I don't want to do that much down. Let's do 100 down. Let's do 100 down. Yeah, let's do 100 down. Okay, so we'll do $100,000 down. 157, right? Nope, too many zeros.
Wait, this property has a mortgage, right? Because she said, yeah, I'm not sure because she said, what is the
that a
remaining
mortgage?
balance? And yeah, she said, what is in the new email, what is the remaining principal balance? She's talking about mortgage.
Probably. Yeah. So we're gonna have to look at that again too, but you need to get the mortgage information for us to look at that. But let's look at
Yeah.
this deal. You have it?
Yeah. Wait,
Okay.
so what do you think he would be more happy? Because like let's say he did do a cash offer, he still got to pay off the remaining balance. And
Yeah, a creative offer would be better for him depending on what his mortgage balance is.
because his mortgage balance is not a lot. It's 100. One is 150K. The smallest is 20.
Oh, then no, it would make more sense for him to want a cash deal.
Because he would get more money.
Well, he would walk away with more money. So if you think about how much money he would walk away if we did creative, the most we would give him is up $160,000 cash is what we would give him. Let's say all of his mortgages total is $500,000. That means that if he sells them cash, he's walking away with $1.1 million when everything is all said and done.
Oh.
So now don't get me wrong, he's still walking away with $1.1 million doing creative as well, but he's getting it over time in monthly payments. So the option is do a seller finance with me, and you can walk away with $100,000 cash plus these monthly payments that'll total your $1.1 million, or sell your properties cash and just walk away with $1.1 million right then and there. So that's why he's leaning more towards cash.
Okay.
But
like
you did offer only $30,000 for a down payment, which good on you for doing that. But we can go higher. I mean, I would feel comfortable going all the way up to 120, maybe 130.
He had no problem. It was just like the interest rate was like he wanted like 7. I was like, I can't do that.
We're not. Well, hold on a second. Let's see what 7 would be. I'm just curious because 0% interest is already $4,000. Yeah, that's more than what we would get if we raised all the rents. So 7% is not going to work at all. But let me see what $4,361 looks like because that might not work either. Let's see, $4,367. Okay, but then now we need to change the tax and insurance for all these to $52,380, I think it was. Oh yeah, the deal doesn't work either. Yeah, this is just not
negative.
Yeah, this is just not a good.
Shit.
Like the entry fee percentage is great, even with $100,000 down. And I think I gave you more money on the. Yeah, I gave you a $35,000 assignment fee on this one, but the numbers don't work. Like what it's renting for versus what he's asking for monthly. I'll tell you what does work. He would have to get Wow.
Damn.
1,100. He'd have to get about $1,100 a month.
400K down.
Yeah. Now, this is the numbers that I would suggest to him. And if the real estate agent or the buyer or the investor, I'm sorry, not the buyer, the investor, the seller want to see it, you can show them this screen right here. Be like, look, man, if I give you 0% down, is 43.67 a month. Look at my numbers. I'm losing $18,000 a year. How am I supposed to do that? But if we were to get it under good terms, it was 10,050. Yeah. If we were able to get it under good terms, oh yeah, the deal still doesn't work. So yeah, the deal does do. This deal's no good. Look,
But
I
when
mean,
that comes to selling it as a portfolio, because like when I was doing like individually, the cash on cash return was good.
probably for each one, yeah, that makes more sense on a creative deal.
So what, like for him, if you're looking from like his perspective, like what's the best thing for him to do? Cash
The best
or
thing for
like
him to do, the
or
best
like a
thing for
hybrid?
him to do would be cash. If I were him, I would probably want to hold out for a cash offer.
But like telefinance, well, it would be hybrid, and if you take over his payments and like
The only
is like
benefit, the only benefit, and this is just this situation because of where his rents are versus what he's asking. The only benefit for him to do a hybrid or a seller finance would be we would come up on his asking price. So in the long run, he would end up getting more money. So if he sold for cash, he'd walk away with 1.1 million instantly. If he did creative, he'd walk away with 1.3 million over time. That's the only benefit in his particular situation.
okay. So, but like okay, I understand that. But like for seller, oh no, you can't do seller finance since it's not a mortgage.
Yeah,
And
this number, these are just based off, you got to remember, this is based off 0% interest and the highest rent. We're not even counting his mortgages and what those interest rates and monthly payments are. And then on top of that, we'd have to pay him what he wants. So yeah, I don't think this is not a deal that's going to work.
okay, and if I was to offer cash, where would I have to be at? Like 1.3?
You would have to be at like $750,000
Whoa.
because
Is
I did
that
the
like
numbers. I did the numbers at $1 million purchase price, and it was still a 6% cap rate. So you'd have to go down to probably $750,000 would be
okay?
your cash price.
Okay, so but like that that's still like selling them at like what if you did sell them individually and you like let's say you got 70% rule or 60% rule minus the 20K.
Well, the 750,000 that I'm suggesting is really generous because I'm not even counting any rehab. And if I remember correctly, you said these properties were lived in for 10 plus years, which
Yeah.
means when the tenants move out, they're going to need to be rehabbed. And I'm not taking any of that into consideration. If I started taking the rehab into consideration, you're probably closer to $500,000. Like, I know you want this deal to work. It's not a deal. It's not going to work. He's asking too much, and the numbers just don't work. Like, this is math.
So if I that's good I didn't get on the contract for like 1.3. Because
Yeah.
I just thought like since the comps were like I just thought since like let's say I did get it for 1.3 and like all the comps saying it can sell for like 1.7, 1.6, then I would be getting a lot of money.
No, not at all.
Yeah.
Let's do the cash calculator right now. Let's say the AR we did the ARV. The ARV I said was about $2 million, right?
Okay.
And let's say it doesn't need any work. I know it does. I know they do. But
Mhm.
let's say it doesn't need any work. That's the most you can offer him. That's 1.3 million. That's with
Hmm.
no work.
Oh
So
yeah.
you're not only is that not including any rehab, which we've already determined that each one of these properties is absolutely going to need, just for the simple fact that they've been lived in for 10 years. That's carpet, paint, and updating a little bit of the kitchen, the bathroom, the fixtures at a minimum for each one. But you're still what, the $370,000 apart from what he's asking, not including rehab. Even if we included 50,000 rehab, 10K for each one, which I think is going to be much more than that. Now look at your offer. You're at 1.24 million. It's not a deal. It's not going to work.
Oh, so the dude was really just asking for like way too much.
He's asking for way too much. I mean, again, it's his property. It's worth 2
Yeah.
million. He could be asking 2 million. So it's not necessarily that he's asking too much. He's just asking too much for us to wholesale it.
Mm. And in order for this to
Not
work,
his.
I gotta be at like 1 million. Actually, no, taking in all the expenses, probably like 800,000.
You got to be at 750,000 max.
Damn.
Like I said, dude, it's not a deal. It's not going to work.
Like, cause hybrid, if we did do that, he would only be getting like 150,000. So he definitely wouldn't go with that. If I was him, I wouldn't go with that.
Yeah, it's
Cash,
not a deal.
yeah, at all. Okay. Okay, I get it now. Good thing I didn't, try
Yeah.
to spend the whole day trying to do this.
Well, you're new. First of all, you're new to wholesaling, and then you're new to multifamilies or portfolios. So, yeah, this is just something you have to learn. And once the video comes out on how to calculate portfolios, cap rates, and all that step by step, I show it on screen. It'll be good. You'll pick it up just like you're picking up everything else. But this one is not a deal. Just let this one go.
Okay. Dang. I thought I could make 50,000.
It's all good. There's a 1.5 million properties listed, dude. Just go get another one.
Uh, so when it comes to, cause I had the different dude trying to sell me his portfolio, like sell, I think it was like 3 houses. And like when it comes, I don't understand the value of, let's say, offering like sub two when they're not getting that much cash. 'Cause, like, yeah, they're not getting that much cash. Like, let's say the house is worth 120,000. They will only be getting like 10,000 cash. So why would anybody go for that option as an investor? Like only 10,000. I know you had to at least put because he
Wait,
rehabbed the property.
wait. As an investor, what do you mean?
Because like it's not an investor as
A
just as a
seller?
seller. Yeah, why would you want to?
It depends on the situation. I'll give you a good example. You just moved into a property 2 years ago. You have a 30-year mortgage. You're doing real good here at Deal Sniper. And I'm like, Daryn, you know what, man? I want to move you down to corporate. Come move down here so you can start running the Discord like I used to. And now you need to move. You can't sell your house on market because you don't have any equity. It's going to cost you money to sell your house on market. So what do? You get someone to give you money instead of you losing money, and you just sub to the mortgage. Hey, I'll give you 10 grand. Go move. Go ahead. I'll take care of the mortgage. That's why. Situations like that where people don't have any equity, but they need to move. They can't sell their house on market. It's going to cost them money. They have to pay closing costs, realtor commissions, and there's no guarantee on when it's going to sell. But you have someone sub to the mortgage. Hey, I'll take over the mortgage payments and you can move. And here's like 10, 15 grand. Yeah, that's a great deal. That's a godsend.
So that is a good deal because like let's say an investor put like 70,000 into the house, and now he wants like a creative purchase. Why even go with that option? Because you're not going to get nearly as much money as
Because you keep assuming that the down payment is all that they're getting. They're getting the down payment and their monthly payments. That's going to total what they're selling the property for. They're getting their full asking price and then some if it's a deal sniper offer. They're usually getting 15, 20, $30,000 over their asking price. They're going to get that money. They just get it over time instead of in one lump sum. That's all. It's like built-in retirement or like being a landlord without having the issues of being a landlord. You're getting monthly payments coming in like clockwork, but you don't have to do anything for it. And at some point, it's going to total whatever the purchase price was, and then you're done.
Okay. I don't know if you have time for what I just sent you. I got the numbers pulled
I've
up.
got 10 minutes, so I don't think we have time for this one, but you can bring it to the live.
Okay.
Yeah, bring this one to the live. Live is at 3:30 Central.
All right. Okay.
Yeah,
Thank you, Sean.
usually my appointments are only like 30 minutes, and we're working on 50 here. So, and I got another appointment in 10 minutes.
50?
I don't want to. Yeah,
Damn.
time flies when you're having fun.
I actually just woke up to that long email and I was like, I can't do that this morning or this afternoon. So
Well, it's all good. I mean, just let them know, hey, we're gonna go ahead and pass.
like
All right,
no self finance.
nothing. No, we're just gonna pass.
Okay.
All right, I'll
Thank you,
talk to you
sir.
later. No worries, my pleasure. I'll see you on the live.